Oh boy, here we go again. Back to work tonight, guys. Wednesday evening, getting ready for Thursday's trading session. We saw some big moves on the charts today. That means some big opportunities coming for us tomorrow. Got a bunch of great trades setting up for tomorrow, especially some traps. Anytime we see big moves like we saw today, we know the money tomorrow, the low-hanging fruit, the easy trades are trapping in traders on the wrong side of the market. We're going to cover everything tonight. I got a bunch of great trades on my radar. I'm going to cover all my favorite trades in tonight's video that we have a game plan to make some money on Thursday. And as always, before we jump in and get this party going tonight, make sure you subscribe to our YouTube channel. I don't want you to miss tomorrow night's video. And if you guys enjoyed the video tonight, do me a favor, hit that like button for me. Appreciate you guys supporting this YouTube channel. But enough of the intro. I'm a little bit late. Let's get ready for Thursday's trading session. Where are all of these traps? Where is the low-hanging fruit? Where's the easiest way to make some money tomorrow? Well, oh boy, what a difference a day makes, right? We got bullish on the Nasdaq, bullish on the S&P, and of course we're still bearish right now fundamentally and technically here on crude oil. Boy, 24 hours ago it looked like these bulls were going to run for the hills, and boy, it was a great example today of how we can do as much as we possibly want prepping the night before, but sometimes you come in the next day and the market says, nope, we're going the opposite direction. That number came out this morning at 10 o'clock. That ISM number came out. The markets loved those lower prices. We talked about this last night, and the market ripped. So, boy, everything is bullish here right now on the S&P and the Nasdaq. Got some really big moves today. The key to making money tomorrow will be trapping the traders on the wrong side of the market. I'm going to talk about that here tonight. Oil, of course, is bearish, and we're looking for some shorts right now on the oil. But I'll tell you right now, this could easily snap right back up. There's a big juicy range back there as well. So, boy, I'll tell you, I got some great pullback trades, got some great reversals on my radar for tomorrow. And speaking of tomorrow, before we jump into each of these charts here tonight, let's make sure we're on the same page. There's not a lot to worry about tomorrow. Tomorrow probably will be kind of at least what we know about right now. Really the only thing scheduled right now that might move these markets is that jobless claims report tomorrow, but that's a big might. Usually jobless claims is not going to be enough by itself to move these markets very much. So I wouldn't hold your breath on that jobless claims. I would imagine what is more potentially could shake things up would be if we hear from any more Fed speakers. Today, as I mentioned just a moment ago, today we saw that ISM services number come out. I told you guys about this one. We saw that come out this morning, and the market loved it, right? It was another very high number, but in the fine print, it was those prices paid. The prices paid, right? Signaling that little bit of drop in prices, inflation, and the markets just ate it up for breakfast this morning. So we're gonna see tomorrow. We'll see if we get any Fed speakers that want to kind of piggyback on that, right? On that news we saw today. Obviously, that is a variable that we don't exactly know about tomorrow, so we'll keep an eye out for Fed speakers. And, it seemed like, well, we're still here. The world did not come to an end. Nancy Pelosi, this House Speaker, I guess a successful trip to Taiwan. I would imagine tomorrow that will be something lingering, and we'll see how mainland China, if there's any reaction at all, that is something that may impact these markets. So pretty wide open as far as I can see. Jobless claims, probably not that big of a deal. Fed speakers may surprise us tomorrow. And again, we may see some more fallout or some continuation of that drama happening in Taiwan. Don't forget, too, Friday is non-farm Friday, so careful tomorrow afternoon. Really anything after 3:30, 4 o'clock tomorrow afternoon, you better have a very good reason to be trading, because the big boys and girls are waiting for that number coming on Friday. And you better come back tomorrow night, because tomorrow night we'll put the game plan together for non-farm Friday. And then, of course, Reaction Monday is next Monday. So don't save your bullets. Save some of your bullets for later on this week and early next week. It's some good trades coming up as we go deeper into the month of August. But let's get back to our charts, though, because the money's in the charts, right? Not a lot of big news events for tomorrow. Now, whether you trade one of these markets or you trade all of these markets, guys and gals, make sure you watch all the way to the end, because you're going to learn something new and money-making opportunities all the way through to the end of this video. I'll provide different trade ideas, different trade variations, different advanced tactics as we go deeper into this lesson. So I'll give you a reason to follow all the way around, all the way through to the end. Let's jump into the NASDAQ first. We'll go NASDAQ, S&P, and crude oil. Be aware tonight, though, the NASDAQ and the S&P, like always, are almost interchangeable. They're very, very similar here on these charts right now. This is a 4,000 tick chart on the NASDAQ or the QQQs. A lot of my students trade the micro NASDAQs in our trade room. I'm really a big fan about those micro NASDAQs as well. So E-minis, micros, right, the QQQs, they all work here for this analysis. And again, a lot of, pretty much everything I talk about in the NASDAQ can be applied to the S&P. There are 3 key insights right now that can tell us where the best trades will be for tomorrow. One, of course, is an overall bull bias. I mentioned this earlier this week and, of course, last night as well. We do still have a general overall kind of medium-term, bull bias right now. We're not exactly a long-term bull market, but over the past few weeks, we've been rising. So we have a bull bias overall. We know that means the buy side will generally be the easier side here for tomorrow. Second clue is going to be that strong move higher. Anytime we see a real strong move in one direction, we expect a pullback and a retest of that high. Buyers, of course, are looking for those pullbacks. And then, of course, at that point, sellers can look for the short off of the high, or buyers can look for a breakout through the high. So anytime we see a strong move in one direction, we expect that, pull back, let buyers buy the dip, take their profit off of the high, and then do we dump off the high, or do we break out through the highs, right? That is a very important clue. And then, of course, the third one here is a big move higher. Now, why is this a big clue? Well, because, besides that pullback that we saw at 10:30, there really wasn't any major correction at any point here today. It was very much just a short squeeze, a runaway market. Again, this market's really reacted to that news coming out of the ISM this morning. And so without any really deep pullbacks, you got to think a pretty deep pullback is likely in a scenario like this. There's a difference here, right? Because sometimes we see a strong move, but it's not a big move, In this case, it's a big move and a strong move. So a strong move says expect a retest of the high. The big move says don't be surprised if it's a really deep pullback, because, just like you and I, every other trader wants to buy cheap, right? And because there wasn't a lot here this afternoon, we expect to get that deeper pullback to attract traders in, right, off of, into lower prices. And that really is where that kind of theme of trapping traders on the wrong side of the market, that's really where the theme comes from here for today. Now, we definitely have some buy setups, right? Buying off that low. We definitely have some sell setups, selling off of that high. There is always a chance that these big moves will reverse because something that happens overnight. So I will look for some reversals as we go down here. Why don't we cover the buy side first in the NASDAQ, and then I'll go over and we'll do the sell side on the S&P. All right? So I'll kind of break it up here. The buy side in the NASDAQ, the sell side on the S&P. Now, what you want to think about right now is I've got some key levels of support waiting down below us here. And this is kind of the area where I would like to be seeing that kind of bounce, right? Or that trapping in of those sellers. Now, there are 2 scenarios for the buy side. Again, we'll cover the buy side first. We'll talk sell side on the next chart. For the buy side, there are 2 basic scenarios you want to think about. One is going to be when we pull back, and again, at some point we will pull back tomorrow most likely. We may go sideways here overnight, just be aware of that, but eventually we'll get that pullback that we want. When it comes to that pullback, trapping in the other side of the market, what I always tell my students is, a lot of times a student will ask, how deep does a deep pullback needs to be? And the answer is very simple. It's very simple. Once this market pulls back deep enough to the point where you're going, oh crap, maybe this is a reversal. Maybe this, as soon as it feels like a reversal, that's when it's deep enough. All right, and we'll talk about that tomorrow in the trade room. And if you don't know what that means, right, just come out and join us in the trade room. I'll show you what it means here for tomorrow. But deep enough so that once it gets down there, you go, oh man, maybe this is a reversal, right? That's when you know it's deep enough, and that's the point, because now what that will do is allow us now to trap in some of those sellers, right? And to do that, we're going to use the 2-try rule. We're going to let the bears try once and let them try twice. Now notice how I draw this. I want higher highs in price on this because sellers want to sell high. Once those bears try twice, now we know right where their stops are, okay? And we can literally buy into those stops. Wait for that nice strong signal, the same signals we talk about in our free trading course, and then look for that run going back higher. Now, as we go higher, where does the market want to go? It wants to go back and retest this high, right? So now let's go out and let's find a new channel. Let's draw a channel off the high, off the low, and then this is where you want to look left and find one of those prior swings and grab that trap. We actually call these trap setups right off of that low. Okay, so it's a 2-try failure to trap in the bears. And then as those bears get their stops run and the market runs higher, we know where it wants to go. So we then look for that new channel and we look to add to the position or re-enter if we're already taking profit and go back up to retest the high. Okay, from there, do we break out or do we roll over and back down? We'll talk about that reversal later on in this video. This is kind of the slam dunk right here, right? 2-try failure into first test trap off the low of that channel. What I want you to be aware of those is sometimes they'll do this. Sometimes they'll rifle lower, they'll pull back, and they'll go like this, where they'll go 1 and 2 like that. Okay, this is where the challenge comes in. Now, if I think about this now, think about now where stops are right there. Okay, now at this point, my risk is this and my reward is this. Okay, that's not good. Okay, not good. In these situations, when it bounces hard like this, what you need to do is go, well, what you want to do is find some sort of trap entry that allows you to put that risk reward in your favor. So now the risk is there and the reward is here. So the moral of the story is on this deep pullback, if we can get that 1, 2 and get a good, get a good risk reward ratio, risk to reward, that's a great trade. What you got to worry about though is when it bounces hard like that, right? Bounces hard, and then you're thinking, okay, there's my 2 tries right there. That's not usually a very good trade. Okay, now you're not buying low anymore. You're buying relatively high, and your risk reward is the giveaway. In that situation, this is where a trap low below that prior swing is going to give you the better entry. Now, you'll notice we're talking a lot about traps in this video. We talk about traps in our free trading classes, right? Traps, failures, pullbacks, and strength. And I know a lot of you guys have taken the free courses. You've learned things like traps, how to use stop losses as fuel. But listen, if you're one of the few folks right now that haven't taken that free trading class, you haven't learned all my favorite setups yet, what I'll do is I'll put a little link up here for you so you can learn the good stuff as well and start putting that to work. Grab the little pop-up there. The strategy I teach in that free trading course, that little free class link that pops up there, that strategy will get you into more winners, help you avoid a ton of losses, and give you so much more confidence, right? You're going to love how much confidence you have after that free class. If you're missing too many good trades or you're taking too many losses, that free course link that popped up there, grab that, learn the strategy, learn the roadmap. It's perfect for someone trying to make the jump into full-time trading. So grab that link in the upper right-hand corner. That way, the next time we get that deep pullback, right, we know what to expect. So watch, right? Watch those 2 variations as we pull back. Now, another very common question is okay, and again, we may go sideways here. So if we go sideways on this, it's virtually the same thing, right? Deep pullback, 2 try. If it bounces hard, it's that trap. Okay, sound good? Now, what if we keep going higher, right? Because, hey, I mean, we really at this point, the Nasdaq went far enough to break through a lot of other levels of resistance. We've got levels overhead, 13,483. It's a pretty big jump, but what if the euphoria continues and the market keeps on grinding higher here? What do we do then? We still wait for that deep pullback, right? Unless something really has to be dramatic. It's very rare for a market to go a big move today and another big move tomorrow. It doesn't happen. Anything is possible, but there has to be some significant developments overnight. You know what I mean? It would require some incredible situation. The market would keep going up without some sort of deep pullback. And even then, a deep pullback will usually come middle to late morning. So if it does keep going higher here, the challenge, of course, will be is if the market kind of breaks higher like that. If it does, then we'll have to get a little bit more different channel, right? We'll draw the channel off the highs, like, you know what I mean? It'll kind of steepen up that channel, right? But the same idea, deep pullback. Okay, and again, how do we know? How deep? Deep enough to the point where you're sitting there going, oh my goodness, this is a reversal. That's the minute when it's deep enough. Once that happens, trap in those bears and look for that retest of the high, right? So keep that on your radar here for that deep pullback, even if we keep on grinding higher. I know it can be difficult because you're like, I'm missing the boat on this, but it's just really important that we don't make that mistake. Okay, that's how we buy this market. How do we sell it though? Right? How do I sell it as we double top? What happens if it pulls back and keeps going? At what point do we sell this thing as it's going lower here? That's a really good question, and it's definitely something that in the world we live in today, anything is possible. It could happen easily. And so let's talk about the short side right now on the S&P. The S&P, as you can see here, is very, very similar here to the NASDAQ, right? We have an overall bull bias right now, kind of medium-term bull bias. We have a strong move higher that suggests a retest of that high, then maybe a short or a breakout going higher here. And then, of course, right, we have that big move today, which suggests a relatively deep pullback. Keep in mind here those two variations that we just talked about on the NASDAQ. I've got my levels here right around 41.43 down to that 41.36. That would be kind of the area I'd be watching. You can see this in prior levels overhead or prior resistance areas that I'm applying here as support. But really, the main goal here is really very, very similar to the NASDAQ. Now, at this point, let's talk about how we short this thing off the high. At this point, right, we will have already pulled back. The buyers will have gone in and trapped in those bears. We go back up to retest the high. And now at this point, this is where we always say in our trade room, mission accomplished. Because now we have that strong move. We got the deep pullback we wanted. We trapped in those bears. And now we take a good chunk of that profit off at that retest, maybe leave a runner at the other side of that channel. But at this point now, all the professionals are already in, and now the pros are getting out. They're lightening up their position right now. At this point, now we look for more traps. Now we look to trap in the buyers who didn't get in at the right spot, and now they're trying to buy into these highs here. Remember the same two-try rule we talked about here? Yeah, we're going to try to trap them in as well. So if I can get that deep pullback, that retest of that high, get some of these buyers coming in, let them now try once, let them now try twice. Now remember, buyers want to buy low. So we want to see buyers come in, try once, and a lower price, try twice. Just like on the deep pullback, I want the bears once and the bears twice at a higher price, right? Because sellers want to sell high. Same thing here goes for the buyers, right? Buyers want to buy low. So as we pull back now to the moving average, right, and I've get my buyers once, my buyers twice here now, think about where their stops are, and we can use those stops as fuel. Okay, look for that nice strong signal. You'll learn about, in fact, you'll see a lot of examples of these two-try failures in that free trading course that I mentioned. I probably have 100 examples of failure patterns in that free trading class. So you'll love that. So think about what the stops are. Right? Run those stops, trap in the buyers in this situation. And now as we run lower, this is where the same dance continues. Now as we go lower, now that momentum shifts. Okay, where does the market want to go at this point? It wants to take out that low, and I would assume it wants to go back down into that trading range. So my goal always is if I can get that short off the high, and the market begins to roll over here for me, I want to get into my add-on before I take out that low, okay, before I take out that low. So now we mark up that low of that channel, we find that high, and we start thinking, okay, where's my trap above that high? Now I say trap. This could be any of the setups we talk about, you guys learn in that free trading course. Could be a trap, could be a failure, could be a pullback combination. Okay, most of the time it's right above one of those prior swings as it lines up right with the top of that channel. Okay, we know where the market wants to go now. It wants to take out that low, right? That kind of medium-term low, and it wants to probably go back down into that big range. There was a range down there from yesterday as well. So that's the way I want to short this thing. Now think about this too. What do you think? Is it possible we might see a deep pullback, trap in the bears, run this thing back up to retest the high? Then we go in, we trap in the bulls, 1 and 2, and we sell it back down again. We take out that, right? We take out that low. And what do we do here? It's now one big trading range now. Make sense? And what do you do with a bull market into a range? You buy low. And how do you do that? Guess. You're exactly right. You trap them in, right? You let those bears get caught getting too greedy down there, and you trap them right in again, right? Usually on these ones, though, the second one, it'll go a little bit through that low, right? It'll go a little bit through that low, and the bears will come in. The bears will go, oh, it's a reversal. It's not really a reversal yet until we can crack and break and hold below that low, right? A lot of times we can sell off that high, take the profit of that low, trap in those inexperienced traders, and rip it right back up to retest the high. Okay, I mean, wouldn't that be a fun day tomorrow in our trade room? So that's something to keep in mind. Again, I know we covered the buy side trades on the Nasdaq, but as you can see here, right, that's an option as well. I would also say too, just to kind of give you more information here on this, and again, everything I talk about right now can apply to the Nasdaq as well. One more thing too. Let's say, for example, now, let's get rid of this channel here for a second. Let's say, for example, we pull back, we trap in those bears, okay, and this thing just launches, right? It jumps up, and we get a breakout going on, okay? Again, this could easily happen in the NASDAQ as well. How do you trade the breakout? Okay, how to trade the breakout? There are 3 breakout patterns you want to look for in this situation, okay? One of the most important things is I'm going to want the breakout to be very strong through that high. It needs to be like this right here, right? It pulls back and it just, right, see right there? It blasts right through that high, okay? I don't want to see any of this where it like puts up and then, but that's not enough, right? It's going to be a pretty strong pop. So keep in mind, if it pulls back, we trap in those bears and we jump back up. Now watch these 3. These are 3 breakout patterns to look for tomorrow on both the S&P and the NASDAQ, and really any E-mini for that matter. Here is a 1, 2, 3 breakout pattern. Okay, 1, 2, 3 breakout. 1, strong move up. 2, pull back to the moving average. And 3, a blast through the high and off. This is the 21 EMA. At that point, mark off a trend line at the high, mark it off at that low, mark up that prior swing because you know that's where the money is, and you want that first test off the low of that channel. Okay, first test. Now, where do we think the market wants to go up there? It's going to want to go up in this area, right? I mentioned earlier this week, 4204 is the kind of the bullish wet dream for the week this week, right? That's the fantasy. That's the fantasy for the buyers this week in the S&P, that 4204 and 3/4. Check a weekly chart and you'll see why. So that is one breakout. Pop, pull back, and blast. Another one would be the pop, but now we don't get the pullback very steep. And now it starts to grind and grind and grind. These grinders are some of the easiest money you're ever going to make in trading. You can draw a trend line off that high, bring it down to that low, and then start marking your traps. Find that first test trap. And again, I say trap. It could be a trap. It could be a failure. It could be a pullback. Okay? So watch out for that one. There was a great example of that one here today, right? It popped up, grinds higher. Guess where you want to buy that? And we've talked about this hundreds of times in these videos, right? Mark off that high. You got it. Mark off that low. Maybe we should go below that prior swing, right? And grab that trap, right? These are things we talk about pretty much every night. And, again, you want to see that pattern over here. Again, not right now, right? But wait for it to pop and then look for that grind. The third one, the third breakout pattern we can also talk about, again, also apply to the NASDAQ, will be a pullback. Again, trapping those bears and really rip. Okay, we're talking rip. This thing needs to really jump. At this point, as we always say, strong move. Get that yellow color on there. Strong move, shallow pullback, higher high in price. What do we always say? Traps, baby, right? I said today, the theme for tomorrow is trapping in those traders. That's exactly what we're doing on that setup as well. On this one, the move just rips, right? It rips right through. It rips right through that high. Okay, so 3 breakout patterns we can use here right now, right, for, again, both the S&P and the NASDAQ. Okay, now the hard part. Now we have the hard part. Now we have the question of how are we going to sell this thing if it breaks down? Okay, because sometimes what happens is you'll see these rips going higher on news, and the following day, for whatever reason, there aren't enough buyers here to buy it back up. This is really rare. So I would not anticipate this for tomorrow, but hey, I didn't anticipate this rip going higher today either, right? So again, we can do as much prep work as we want the night before, but we got to come out every morning and look at what the chart's doing and say, okay, what's the sentiment here for today? So it's possible. It doesn't seem very likely right now, but it's definitely possible. So there's a couple things you want to think about. The most common way that these types of kind of runaway trends are going to reverse is they're going to pull back. And usually what will happen is it'll pull back, like this. The bears will come in. They'll try once. They'll try twice. We'll get that signal, grab a quick little profit out of it, but then they'll try to hold off of one of these traps. Okay. In other words, the bears are getting trapped, but now the buyers, right? Sorry. Now the buyers are getting trapped. That is one of the most common reasons why these will fail, right? In other words, you'll see it pull back. The bears will get long down here and they'll get some money out of it, but for whatever reason, something stalls the market out and the market just punches and runs lower. So what you want to think about on this one is it'll look like this. It'll be a move down. It'll be a pullback, usually just a little bit above that moving average, and it will blast running lower. That is a very good sign and what we call a 1, 2, 3 reversal. Okay, 1, 2, 3. Once that market blasts lower, right, now we basically, again, it'll start really pushing lower on this point. We'll mark that low. We're going to mark that high. Believe me, I hate it when I miss that move going down, but you can't really predict it because it's such a strong bull trend. So at that point now, we go out, just like always, find that channel, mark those prior swings. We're trying to get up above some prior swings, and then more importantly, trapping in some buyers above the moving average, trap, failure, pullback combo. Where do we think the market wants to go at this point? Here's a really easy giveaway. It's the first leg and the third leg, right? First leg and third leg, okay? We know there's a range down here. We know we got 4,100 big round number, but it's going to be a little bit more precise by first leg, third leg. First leg, messy middle leg, third leg, symmetrical. Okay, keep that in mind. Another one which would be pretty incredible if this happened. But again, all this can be interchangeable in the NASDAQ as well. Let's say, for example, now we slice lower, right? And now just all the buyers walk away. Something happens overnight. Fed speakers are like, no, we're going to go big in the next rate hike. Inflation, again, the sentiment will completely change in the market. And now the market doesn't pull back and blast. It starts to grind and grind and grind, right? Remember that grinder is a good giveaway. Mark that low, mark that high. And I know these are tough because oftentimes those grinders, they make you want to draw the channel nice and tight like this, but drop that big top like that and then go out and find those prior swings, right? And then grab that first test, that trap, that failure, that pullback. You'll learn a lot about trap, failure, pullback combos in that free class, those free course videos I mentioned earlier on in tonight's lesson. All right, so keep that in mind here on the S&P. As you can see, there's definitely some good shorts that we have to work with, and we'll see what we get tomorrow, right? Again, very good example today of how we can prep as much as we want today, but sometimes the market opens up with a different plan for us. Now we got a pretty good plan of attack, though, on the Emini and the NASDAQ for both sides of it, right? The buy side and the sell side. Let's wrap things up tonight over on the crude oil. Now, I'll tell you, crude oil, well, there are three key components right now. First of all, bear bias. We also heard today from OPEC. OPEC announced today they have agreed on a production increase. Of course, that will be a bearish headline for oil. We already kind of knew that, kind of fundamentally right now, demand is slowing down for oil around the world because of the economy pulling back. We know that technically speaking, there's always potential for a snapback if things dust up again in Ukraine. But overall bearish right now for that bias. Second thing is a strong move lower. Anytime we see a strong move, and you could easily argue there weren't that many deep pullback opportunities as the market grinds down. And so what does that tell you? A strong move says, look for that pullback and a retest of that low. Then do we get one of those beautiful double bottom reversals, right? Or do we break out and go to 90? At the same time, it's not the hugest move in the world. It's a pretty big move. So it wouldn't surprise if we saw a pretty deep pullback to trap in those bears again. So think about it that way, right? Or trap in those bulls, I should say, at this point. So strong move, big move, same basic criteria as we mentioned on the Emini and the Nasdaq. The third one is really the wild card here for tomorrow, and that is the pendulum swing. Now, this pendulum swing goes back to, if you recall, we were watching this just nasty, a trading range that only a mother could love, as I always say, right? Not the prettiest range in the world, pretty ugly chart, but you see what happened, right? We went above the range and now back down again. And one very interesting thing about ranges is the amount we go above the range is oftentimes equal to the amount we go below the range. Okay, now we definitely pushed through that by a good margin, but not enough to be, as I always say in my trade room, not a convincing amount, right? It looks like right now this might have been some residual move going lower. So that kind of makes me wonder, yes, I definitely looking for that short back down, and of course that buy back up potentially. But I wonder if we're not going to see this thing kind of evaporate, if you will, and rip back up into that range, because ranges, of course, are magnets. And since a lot of this move today, I'm sure was fueled by, you probably have heard that negative correlation, right? Equities up, commodities down, equities up, oil down. When oil's down, people can afford more securities or equities. Right? Equities are up, right? Kind of negative correlation on oil. So it makes sense that with that kind of that squeeze mentality on the E-minis we saw today, it may have provided a little bit more bearishness out of this than you normally would get. If you take that away tomorrow, this market easily rip right back up into that trading range. So a lot of this is going to be kind of a summary of what we've already discussed a lot in this video. We'll kind of put all these pieces together. It's a strong move. It's a big move. I'd like to get back up into the zone I have really specifically is that 93.22 to 92.5. That's the actual zone. This area over here is nothing more than that prior low, right? Kind of use that area as resistance. So if we get up in this area here again, you really have to be thinking that range is going to try to drag this sucker back up higher here. So again, think about now those buyers trying once, buyers trying twice, and those stops for that short back down to retest that low. Remember, if these are very sharp, just as we talked about on the E-mini, if it's sharp like this with 1, with 2, now we don't want to sell down here because it kills our risk reward ratio. We look for a trap off that high and sell that. That gives us a much more desirable risk reward ratio. Does that make sense? Right? Does that make sense? If it does, give me a hell yeah, give me a heck yeah in the comment section. And thank you so much for watching all the way along in this video right now. If you're still watching this lesson right now, you are the person I do these videos for. I know people want these videos to be 2 minutes long, but you can't really get a good understanding in a 2 or 3 minute clip. I know YouTube wants it, but again, I appreciate you guys sticking around all the way to the end. If that resonates for you, if that's a good tip for you, let me know in the comment section, and any other tips that I can help out with to help your trading. So at that point now, what if we pull back though? And what if we pull back now and the buyers come in and they jump off that moving average? That is a 1, 2, 3 reversal. We mark off that high, we mark off that low, you got it, and we grab that first test off of that low. remember, 95, 90, 100, right? $5 moves are big round numbers right now. First leg, right? First leg, third leg are going to give us good spots. We can easily see where these buyers are going to want to get to. Or maybe it simply pops up and begins to grind. Pops up and grinds and grinds and grinds. It doesn't exactly pull back and jump, right? It just pops up and kind of floats and grinds higher, what they call a melt up. We can now mark off that high. We can mark off that low. We can go out and find those prior swings and grab that first test, first leg, third leg. Okay, we're getting somewhere here. So now we can see some ways to sell it off the high, and of course, if it fails, to buy it as it's running higher. As always, if we go back up, we trap in those buyers, we sell into stops, we go back to retest the low. Moving average comes over. The smart money is selling up here, right? The smart money is taking their profit down here. So that this is the dumb money coming in and selling down here. Let those weak hands, let those suckers come in, let them sell into those lows, and you use those stops as, pardon the pun, I guess it's pretty fitting right now, but as gasoline, right? Use those stops to trap in those bears, right, off of that low. Where do they want to go? They want to go right back up and take out that high, and then potentially, do we see that pop up in one of those 3 breakout patterns I talked about earlier? Right? Remember back on the S&P, we talked about those 3 breakout patterns, the 1, 2, 3 breakout, the pop and grind breakout, and that strong move, shallow pullback, higher high, those 2 trap breakouts, right? So keep an eye on that as we go. And again, on the oil, if we keep on kind of grinding down here, remember, not much changes. We're still waiting for that nice deep pullback. How deep again? How deep? Right when that little voice in your head says, oh my goodness, it's reversing. No, not just yet. Let all the inexperienced traders think reversing and sell into those stop losses. Right? Because you've got the knowledge now of what these types of charts tell us for the following day. All right, guys, that's the game plan for tomorrow. Very excited for tomorrow. Whenever we see big moves one day, we know deep pullbacks can lead to some really, really good profits. So hopefully you'll get your slice of the pie tomorrow as well. And don't forget, speaking of tomorrow, we're going to get together tomorrow morning and do it together. We've outlined our game plan for today or for tomorrow. Tomorrow, the fun begins in our trade room every morning, 8 o'clock Eastern time. Come out and learn and trade along. If you're missing too many good trades or you're killing your account with too many costly losses, our trade room is designed for helping traders succeed. I have all the software templates, all the worksheets to follow along with all the pattern setups. It's if you put a little bit of effort into it, you're going to get some great results. I'll put the free class links. I'll put the membership, the trade room links, all that in the description of the YouTube video. Don't be afraid to call the office. I know I move quickly on these videos so we can slow it down. Make sure you got the right brokers, accounts, and data feeds all set to go so you're ready for trade this tomorrow morning in our trade room. You can always use that live chat if you ever have any questions there, and you can always type those questions in the comments section below. The easiest way to get information is to call the office or use that live chat on the website. All right, guys, hope you learned a bunch. Hope you use this knowledge to earn a bunch tomorrow, and hopefully I'll see you tomorrow morning, 8 o'clock Eastern time in our trade room. If not, we'll come back and we'll run it back and we'll do it again tomorrow night, getting ready for Non-Farm Friday. Either way, as always, my name is Joseph. Thank you so much for tuning in and sticking around to the end here. Be well, be nice to each other, get some sleep, and I'll see you tomorrow. Adios, amigos. Bye-bye for now.